So you would think that your bank doesn't want you to overdraft your account, that they don't want you spending money you don't have. But in fact, they do, because they make billions and billions of dollars off, $17.5 billion each year from people who overdraft their account. And in the old days, if you overdrafted your account, they would maybe charge you a fee, they would tell you not to do it again, but then they realized they can make all this money. So nowadays, when you go to the ATM and you try to take money out, if you don't have money in your account, they'll give you your money, they'll give you your $40, but they'll charge you a $35 fee. Or if you go to use your debit card and you're buying an item for $15, they'll approve that transaction even though you don't have any money in your account, but they'll charge you that $35 fee. And back in the old days, and by the old days I mean 2004, when you put your ATM card into the machine and you didn't have the money in your account, or if you went to the debit card, if you used your debit card and you tried to buy something, you didn't have your money in the account, 80% of banks would deny that transaction. And in the last few years, they've realized they can make a lot of money off of this by taking consumers who don't have enough money in their account, charging them fees, or maybe even just people who don't realize they got a negative balance and would assume, as I think we all would, that our bank won't let us spend money that we don't have. What do we know about overdraft? Well, we know that almost half of all overdraft fees are paid by people using their ATM card to take out cash or their debit card to buy items from a store. So that's almost half your fee. So it isn't about checks or other types of transactions. They're making most of their money off of these small dollar transactions. Transactions where people think that the bank would deny it. Now we also know that overdraft affects different age groups in different ways. So young people, much more likely to use their debit card for really small transactions, $1 or $2. So if you go out and you buy, I don't even know what's still $1 these days, but let's say you're going to buy a candy bar. And you're going to use your debit card for that. Well, if you don't have enough money in your account, they're going to let you buy that candy bar for 75 cents or $1, but then they're going to charge you a $35 fee. So now you're walking around with a $36 candy bar. And I don't think anyone would choose to spend $36 on a candy bar. And so for young people that are disproportionately affected by overdraft, they pay a disproportionate amount of fees given the amount of 18 to 24-year-olds in the banking sector. And because they're spending those low dollars on their debit cards, they're paying even more for credit. You got to think about overdrafts as credit, because that's what the bank does. They're going to let you use that dollar that you don't have. They're going to loan it to you, and they're going to charge you a fee for that loan. So they're charging you that $35 fee for that $2, $3, $4, $10 transaction. That's about the most expensive loan that you